What makes private equity fund accounting different? Regardless of your company structure and entity, by law, you must keep and maintain financial records. So it's important to find an outsourced controller, CFO, or business advisor that has experience in private equity fund accounting so that they can assist you with complying to partnership accounting standards. General accounting standards involve recording all income that's coming into the business and all expenses in the general ledger. Fund accounting comprises the general ledger, investment holdings, and capital allocations. Of the accounting standards, a fund is more complex than general because a private equity firm purchases assets with investors' funds, whereas large corporation and smaller business using general accounting standards use their own cash. Some businesses earn revenue by selling services and products. Private equity general partners and fund managers raise funds from LPs, limited partners, and investors to invest in assets. Basic private equity fund accounting. The investment amount funded by investors and LPs can vary with different percentages of ownership in the fund. Investors and LPs invest in different investment vehicles, such as endowments, foundations, pension funds, and companies, which require allocation in accounting. Allocating private equity fund transactions. Accounting for private equity fund transactions from all partners must be accurately allocated with complete transparency of each partner's responsibility and ownership. Management fees and fund expenses are not allowed in the fund allocation, while LPs pay a percentage based on ownership rights. To overcome the challenges of private equity fund accounting, business processes of a private equity fund are divided into two activity categories, requiring a registered SEC outsourced private equity advisor. While PE funds are not required to register with the SEC, an outsourced PE advisor or CFO is traditionally SEC registered. Investment activities comprise investments such as funds, real properties, companies, land, and cash flows of the fund manager. And here are some examples of capital activities. Cash flows include management fees from the LPs to the GP and cash stock distributions from GP to the LP. Private equity accounting complications. Accounting for private equity has its complications, comprising waterfall calculations of distribution, closings, and equity accounting method. Calculating distribution waterfall. Distribution waterfall calculations are complex in fund accounting because of the different structures and methods of calculating tiers and catch-up. Waterfalls are challenging to calculate and to determine the value of an asset based on the return of contributions, preferred return, catch-up, and split between LPs and GP. Another challenging aspect of private equity fund accounting is closing after its initial close date to conforming to a new investor. How private equity fund accounting software can create accounting workflow efficiency. How private equity fund accounting software can streamline your fund accounting workflows by combining solutions for general ledger, financial statement reporting, standardized workflow, PE bookkeeping, accounting standards and integrated software, tax planning and preparation. We know that this is a lot of information, but Fusion CPA can help you implement private equity fund accounting into your business. Fusion CPA offers outsourced financial services and accounting software solutions to businesses, fund managers, and PE firms. We can help you reach your goals for growth and leverage with limitations and restrictions of overflowing finance. Our private equity fund accounting services combine experiences, technology, and expertise to ensure accurate accounting that meets compliance of FASB and IASP. To find out more, contact Fusion CPA.